What's up, everybody? Welcome to the Bullish Channel. Today, the stock market bounced off of support and maintained the bull trend. With FOMC tomorrow, it is likely going to be a very volatile day. First up, let's take a look at a daily chart of the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. All right. Today's SPY was up 0.56%, and we had a very solid day of trading by simply following the rules I've been talking about, which is that the indices are likely going to stay within this range, and we are going to have a stock pickers market. We did extremely well in the Discord server, and we have been crushing this market, and we're going to continue crushing this market. And it's really just as simple as staying objective, because there's still a lot of people getting extremely bearish and calling for stock market crashes while we still have the bull trend. Listen, at some point, this bull trend will top, and we will see it in the price action when it rolls over and starts to reverse the bull trend, and we will adjust and we will become bearish. And at that point, it will be undeniable that we have a bear trend going lower, or just call it a stock market correction within a larger degree bull trend. But regardless, we have no evidence from this chart that we are ready to go lower, and that is why I continue to caution you against getting bearish just for the hell of it. This is a bull trend. Price action is above all the moving averages. We are bouncing off of a rising 20 daily moving average time after time after time, and bears continue to tell us time after time that the market is topped and we're going through a crash. So just once more, I want to be that voice of reason that tells you everything's okay. Follow your chart, make your trade plan based on your chart, manage risk around the critical level so that you know exactly how much money you're putting at risk. And it really does not matter if you're going short or long, just make sure you're picking the right stocks to do so. You don't want to be shorting a stock like Nvidia, and you don't want to be going long on a stock like Beyond Meat. It's just really that simple, so don't overcomplicate it. So on SPY, we are going into FOMC tomorrow, and we did have a bullish engulfing candle today, and all we did was come down here and close the gap intraday and bounce off support yet again. So once more, if you look at this on a smaller time frame, this is a higher low into a higher high, which is obviously very bullish. So does that guarantee we need to go higher tomorrow? Obviously, it does not guarantee anything, but the probabilities favor that we will go higher because we have a bull trend, and it's a bull trend until it's not. In a bull trend, stocks do typically like to go higher because the trend is putting upward pressure on the price action, and the next logical area to see SPY go if we're going to maintain the bull trend would be right up here at 520. So do not be surprised if tomorrow after FOMC, we are talking tomorrow after the market closes, and I'm telling you that SPY is at 520. Now, if we don't go to 520, then we need to come all the way down here and break this support right around 510. And then below 510, we have another strong support just a few dollars lower at 507. So there is a ton of support for the bulls, and you are in a bull trend, so the bulls will show up at support. And that really shouldn't blow your mind what I just said, because that's just a typical bull trend of buying the dip at support and going in the direction of the trend. So hopefully I didn't lose anybody during that. I do like to keep it very simple here on this channel, and we follow price action. And if you want to come crush this market, you really need to consider joining the Discord server, because day after day, we are absolutely crushing this market, and we are trading a lot of stocks that I don't talk about here in the video update. On the NASDAQ 100 triple Qs, we were up 0.25% today, and the triple Qs are back from the dead because intraday we did gap down and we hit the bottom of the range, which is right there, right around 434. And lo and behold, I told you we would likely stay within the range, which meant you shouldn't be looking for a flush right now. This is a time to buy at the bottom of the range, and that is exactly what the bulls did. And here we are right back in the middle of the range, right around 438. So this is what range trading looks like, whether you like it or not. This is how ranges work. You bounce off the bottom of the range, and then you go all the way back to the top of the range, and you just keep ping-ponging around until we break out of the range. And then once we break out of the range, the price action is telling us where the next leg in this market is. So the top of that range is likely where we're headed, and that is pushing us all the way up to 445 to 448. Now, if we break the bottom of the range, we have support just a bit lower at 428 and a gap to fill at 425. So if we break down, which is going to be very difficult with these Bollinger Bands squeezing, but if we do break down, those are the support levels you want to watch for. So we did see the price action above all the moving averages at the close, and we don't have a candle quite as bullish as we do on SPY, but this is still a bullish close, and we did close above the support at 437. On the Dow Jones, we were up 0.82% today, and the Dow Jones also stayed within the range, bouncing off of the range low just above 385, and we're back at this very important resistance zone between 391 and 392. If tomorrow we break out of the top of this range, it will invalidate this as a double top rejection, and that means we could start pushing higher towards 400. If we get rejected from the top of the range, it means we're likely coming back down towards the bottom of the range at 385, and then below 385, we are looking like we're rolling over and confirming the double top. On the Russell 2000 IWM ETF, we were up 0.42% today, and IWM is bouncing off of this very important support at the rising 50 EMA at 199, and I do think we are heading higher towards 214, but I'm wrong if we start to break down below 199, which means we need to get more risk off for a possible retracement back down towards 190. So 199 is a very important support, and I do think you can buy the dip above it, and then below it, just get risk off because we're likely going lower. The next upside critical resistance we need to break is this closing high above 207, and then we should have no problem getting that price target at 214. On the ARKK ETF, we were down 0.57% today, and this ETF is fighting for its life, trying to hold on to this very critical support between 47 and 48, because if we break down below that support, it will look like a double top rejection going back down towards 44. Now, while we're above support, it could be a pullback to a higher low before we continue higher, and the bullish breakout will be the break of resistance at 51, and that will validate we're going higher towards 54. On the VIX, we were down 3.56% today, and I continued to tell you the VIX was making higher lows, but in the bullish scenario, we are going to break that trend, and we're going to see the VIX breaking down towards the 12s or at least the low 13s, and we are very close to confirming that breakdown in the VIX. But as you can tell by today's close, we are getting just a bit closer to that previous low, and there's still the opportunity of a higher low here unless the VIX starts to crush even lower. So tomorrow is FOMC, and that's usually a volatile day, and we don't know if we're going to see a bullish close or a bearish close. So watch the VIX closely, because if we're getting the bearish close, the VIX will spike out above 15, and we will start to get that high volume panic selling. Otherwise, we're maintaining the bull trend, and we're just going to continue to go higher. On Bitcoin, we're currently trading just below 64,000, and we did get that lower high rejection that I talked about last night, that I told you if we got rejected, this was a lower high rejection into a lower low, and that meant we were likely coming back down towards support, which is going to be at the support trend line right around 61,000. But there's a very good chance that support level is going to fail, and we're going to come back down all the way here towards 52,000. Now that will take time, because looking at the Bollinger Bands, we can't currently go a lot lower without going below the Bollinger Bands. So basically watch that closely at this support right around 61,000, and if we break down, we will continue to expect lower highs and lower lows. If we bounce off of this support and we get a very high volume bullish bounce, then we could still hit that price target right around 75,000. On Nvidia stock, we were up 1.07% today, and this is something we don't talk a lot about on this channel, and I do have to bring it up because I do think this is a very unique situation, and I would be doing you an injustice if I didn't at least mention it, and that is the fact that Nvidia currently has a monopoly on the artificial intelligence space, because they are the only ones making chips that are going to do what we need to do in artificial intelligence. So I know I told you we would likely build out this bull flag and consolidate before going higher, but now I'm going to go as far as telling you we've likely already finished this consolidation, and I think this thing is about to blow off the top and just start rallying a lot higher into those price targets I have up there at 994 and 1032. The reason I'm telling you that is because now Nvidia has unveiled exactly what they're going to do with the future of AI, and it has completely dwarfed the competition to the point where I don't even think we're going to need to see other semiconductor stocks. It is going to be concentrated buying right here in this one name, and it is very hard to stop this stock because there's nowhere you can go to get chips that are as good as the chips that this company makes. So again, we don't talk about fundamentals a lot, but I told you it would be an injustice if I didn't at least make you aware of it. And I will give you one last warning to the bears. If you are trying to short this stock, you are going to get your ass handed to you on a silver platter. This thing is likely going a lot higher, and it doesn't even need to obey the laws of physics, which means gravity does not apply. And if you're shorting it, all I can tell you is that you'd have a lot better time just lighting that money on fire and watching it burn, and you would get a lot more entertainment out of it. So be very careful if you're bearish on this stock. It's extremely bullish, and it's just built out a bull flag, and you're just now starting to get very decent high volume buying as we're getting ready to break out of this bull flag and go a lot higher. So what I'll tell you is it's a buy the dip stock as long as we're above 850. And if we break down below 850, it's still buy the dip at the gap close at 823. So those are the very critical supports. I don't think we're going to have any trouble staying above them, and I do think we are going to 1000. On Tesla stock, we were down 1.43% today, so we are taking a day to cool down since we hit the resistance at 173, but we are still closing above a rising 5 EMA, and there is still a good chance we push higher towards 183 to 187. Now, manage risk very closely here, because if you're going long on this stock, there is a gap down here that could fill, which is right around 165. If we can't find support at the gap fill, and we can't continue to bounce and make a higher high after the higher low, it is still possible we do come down here towards 160 to 158. That is going to be a very strong support, so I will continue to suggest buying the dip there, and I do think we are going to 187 before the end of this quarter. Obviously manage a risk, because I could be wrong, but that's what I think, and that's what I see, and that's what I'm trading, and buying the dip on this stock could be very rewarding until we hit to these higher price targets. On Apple stock, we were up 1.36% today, so we are continuing this bullish trend towards this resistance between the negatively sloping 20 daily moving average at 176 and the resistance zone at 177. Now, I do have this arrow to the downside for reference because we are in a bear trend, and in a bear trend, we have to acknowledge the fact that this could be a lower high before the next lower low, which would take us down to 167 if we reject from 177. Now, if we don't reject from 177, then we could push all the way back towards this resistance in the 180s, and then that could still be a lower high before we continue lower. However, I do want to bring up the point that we do have a higher low here into a higher high, so we do have the very early beginnings of a bull trend, and I am getting a lot more bullish on Apple stock after today's very bullish price action, because in my opinion, this has proven that we have buyers as we start to dip, and we couldn't even have the bears close the gap below 173. So I am bullish on Apple stock, and I know I have a downward arrow, but I do think we're going higher. I'm just respecting the trend because nobody is better than technical analysis, and the technical analysis is still a bear trend that could be putting in a lower high. This is the discipline part of being a trader and not just going with a bias, because yes, you could have a bias for going higher, but the chart is not allowing for that bias until we start breaking some of this upside resistance. So jumping back over to the S&P 500, today was a very bullish day, which is very evident by that bullish engulfing candle on the daily chart of SPY, and tomorrow is FOMC, which is typically a very volatile day, but I don't really expect the market to learn anything new after this FOMC, so it's likely just going to be a giant nothing burger, which generally favors the direction of the trend, which is still higher. So it's a bull trend until it's not, and that simply means we are going to continue to buy the dip until the chart tells us we shouldn't be doing that, which is going to require a bear trend and a significant break of critical support in the indices that tells us we should no longer be buying the dip. We are going to continue to crush this market, and we have been crushing this market, so if you want to come crush the market with us, consider joining the Stocks Channel Discord server. You'll get access to all of my intraday updates and technical analysis and all of my trade ideas, and I still think there is going to be a ton of great trades this year, and we are only getting into the very early stages of what could be some very big winning trades this year. So if you want to come trade with us and get access to all of my updates, join the Stocks Channel Discord server, which you can find out how to join by clicking on the link in the description of this video. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.